It's Tuesday, January the 28th, and I'm David Song, currency analyst with Daily FX, here to cover a few things revolving around, of course, the highly anticipated Federal Open Market Committee interest rate decision on tap for tomorrow. Of course, this will be the last meeting that we have with Chairman Ben Bernanke before he departs. And of course, we will be seeing Ms. Janet Yellen take the helm of the Fed next month. So we'll see what we get in terms of new language for the Fed, maybe some interesting things in terms of the forward guidance for monetary policy. But of course, with that in mind, guys, largely market expectation, they're looking for another 10 billion taper. That should bring down the asset purchase program to 65 billion on a monthly basis. So we'll see how those fare compared to market expectations. But of course, with the Fed, the language will be ever so important, as again, we will have a new central bank head next month. And of course, we'll see if we get any new language, and of course, whether we'll see any sort of twist to that forward guidance for monetary policy amid the stronger recovery that we're anticipating for 2014. But with that, guys, of course, largely for U.S. event risk, I like to trade the euro as well as the dollar yen. So let's take a quick look at recent price developments. And I think there's a few interesting things we're going to have to note here. With the euro dollar, of course, still watching the bearish divergence in the RSI index. After breaking this upward trending channel, dating all the way back to that July period, again, failure to close above 138. Respecting the downward trend that we had from 2008, looks as though we have made a very important top in the euro dollar, especially over the near term. So depending on what happens with the Fed, but right now, near term, it looks as though we might be in this sort of new bearish channel that's really started to take shape. Of course, tomorrow with Fed on tap, hopefully we'll get a little bit more clarity in terms of the technical outlook for the euro dollar. So right now, guys, it looks as though we might see a continuation of the series of lower highs paired with lower lows. And if this trend continues, should we get the 10 billion taper plus a little bit more of upbeatness out of the Fed, could see some further declines in the euro dollar tomorrow. Dollar yen, let's take a look at that as well. So I was largely trading dollar yen last week, was short from 104.40 region, took it down all the way into 101.90 right at the Sunday open, largely out of the position right now. But one thing we were looking for in the dollar yen in this current series, the bullish, long-term bullish trend remains in place. So we were looking for that the higher low. And it looks as though we might have carved that right around that 101.70, 101.80 region. But again, with the Fed on tap, we'll look at that interest rate decision tomorrow for a little bit more clarity. But also another thing to watch on the RSI signature, at least over the last few months, guys, we've been seeing that 36 level on the RSI. Hold that as key support there. So if that holds and we do have the lower high in place from here, if we do get, again, a more bullish statement from the Fed, a little bit more hawkishness, and with accompanied by a 10 billion taper, might be a nice time to maybe revisit our game plan of buying dips in the dollar yen. Could certainly be a turning point now that we have marked a higher low for the dollar yen. But with that in mind, guys, of course, ahead of the FOMC, might see market volatility really thin out. Of course, we're seeing a lot of mixed reaction to the U.S. data prints from this morning, largely U.S. durable goods, the big miss on that, and also we did see that better than expected consumer confidence survey. But with that in mind, guys, again, might see dollar just consolidate ahead of the FOMC, but again, could be a very big game changer if we do see a lot of new developments coming out with Ms. Janet Yellen taking over next month. So with that, guys, as always, good luck on your trades and stay prudent.